Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com, and we have a lot to cover this morning. Macro Monday is here. Markets are trending sideways early in the day. The leaders are leading. The laggards are everyone else. We know what those leaders are at this point in the market, all right? We got a bunch of charts to show you, some insider selling that just continues to dominate as well, and we will get right into the charts. So welcome again to the Game Plan. Let's get into the action. All right. Right into the charts here. Let's start right out without any delay. We're looking at the S&P pre-market here, and what we're seeing is that overall we're basically trading sideways. And what I mean by that is that the S&P closed right here on Friday. We're trading right here pre-market, all right? So all in all, that's down ever so slightly on the day. Not much going on. Volume is anemic, and again, because we don't have economic news that's big today, we did get New York manufacturing index, but again, it was pretty much a minor number compared to inflation data or jobs data. That's kind of taking a back seat. And then again, the markets are almost unchanged here on very light volume. Now, if we flip over to the NASDAQ 100, I'm sure we can all guess the NASDAQ 100's hanging in there just a little bit better, although not a ton. Like, let's be fair, right? NASDAQ 100 closed here on Friday, and it's trading right here right now. That's only a slight positive today. So S&P slightly negative, NASDAQ 100 is slightly positive going into the open. By the way, don't forget, guys, after this stream at 9:45 a.m., we're going to be live in the trading room trading. Every Monday we do this. We call out trades. You're looking a live view into the Apex Live day trading room where we're giving members trades all day, every day, Monday through Friday. So tune in for that. But listen, when it comes down to it, why is the NASDAQ the strongest player out there? The answer is simple: NVIDIA, Apple, Microsoft. That's all you need to know. About $10 trillion in that. And by the way, that brings up a crazy point. So we all know how many ETFs are out there, right? There are literally hundreds, if not thousands, of ETFs in the market now. Anything that tracks the S&P or the NASDAQ has those other players in it, right? Now think about this. If you are one of those $6 trillion companies, so we have 6 companies that are valued at $1 trillion or greater, they make up 33% of the S&P 500, all right? So 33% is 6 companies, all right? The remaining 67% is 494 companies. What does this mean? It means that this passive investing that's become so popular, when people put $1, for every dollar they're putting into a passive ETF that tracks the S&P or the NASDAQ, and by the way, NASDAQ's crazier, but we're just focused on the S&P, that means out of every $1, right, so every $1 here, that means 33 cents of that dollar goes into these 6 companies. 33 cents. What does that mean for the other poor 494 companies? They get to split 67 cents out of every dollar, split between 494 companies. That's insane. But it's one of the reasons why we continue to see such relative strength in these mega cap plays. They've become so dominant. There has been no other point in U.S. history where we've had 6 companies that have dominated the indexes like this. You could go back to the pre-Great Depression period. It wasn't 6 companies. It was much greater. You go back to 1999, the dot-com era. It was much greater. Yeah, it was still concentrated amongst a select few, but it was many more companies than just 6. This is, again, a crazy stat to think about. Now, let's talk a little bit more about this. I want to show you this stat because I think this is one of the things that really catches my eye. If we go to the S&P 500 here, this is called crocodile jaws. All right, this is an institutional term. I know it kind of sounds weird. For those of you in the institutional side, you'll probably recognize this term. What you have here is the differential between what we see in the equal weight S&P as well as the regular S&P. All right, so this is the regular S&P, right? S&P right here. That's the S&P. This is the E for equal S&P. Now, what you're looking at here is the domination of those 6 companies and what it's doing to the regular S&P. Look at this run here, but look at how the equal weight is lagging and actually going lower. Look, you had a high over here, and it's actually gone lower versus a high here, and the S&P has gone up. This is telling us that we have a market that is now basically over-dominated by a few companies, while everything else is actually starting to go down. And I'll show you the advanced decline line in just a minute. Now, again, what does this all mean? Well, basically what it means is we don't have to pay the piper yet, but you have to be aware that at some point there's going to be a reversion trade. The reason why this is called crocodile jaws is because literally you can draw this. Now, what does that look like, right? We could throw a few teeth in there. A few teeth. I could get all wacky with my great artistic skills. But you guys get the drift here, is that at some point, these slam shut. And that is problematic. Yeah, maybe the other stocks might hold up better, but in general, when these things come down, when this jaw slams, that's where things get troublesome. Now, again, a lot of you probably saying, well, who cares, because that's not happening right now. And you're right. Right now, the music is playing, it's musical chairs, and no one has to sit in a chair. Essentially, the tide is in. We don't see the tide go out until, and then once you see that tide go out, as they say, you find out who's wearing a bathing suit and who's naked there. But right now, that crocodile jaw is massive. Just to give you another perspective on this, for this year, so this is going back to the beginning of January, right here. For this year, the equal weight S&P is only up 5%. The regular S&P, 15%. Think about that. That just shows the domination. Now we can also flip it over to this chart, another crocodile jaw, even crazier for the NASDAQ 100 versus equal weight NASDAQ 100. The NASDAQ 100 here, there's your crocodile jaw here, right down to here. And this is up 20% versus 7% for the equal weight. And again, it's all because of these few companies. Now listen, as long as things stay fine and the economy doesn't start to crater, then this honestly could continue. But again, it is a time bomb, meaning that at some point time runs out and at some point it does have to revert. So I guess the purpose of me making this speech to you guys is not to say that, oh, we're on the verge today or tomorrow or next week. I have no clue, to be honest. But what I do know, and this is from 25 years of experience through the dot-com bubble, the 2007 highs before the financial crisis, from COVID, all of these things, is that it all has a time factor to it where at some point it ends. And the thing is, you don't want to be the one holding that bag when it ends. It will get nasty. Okay, one more thing I just want to quickly show here on the charts is the advanced decline on the charts. So this is another good indicator that there is trouble brewing, that more and more stocks, basically that 494 stocks in the S&P, are starting to go down versus those few stocks that are keeping the S&P making new all-time highs. This is what we call the advanced decline line down here. And what in general the advanced decline line should look like is when the market goes up, the advanced decline line goes up. All right, when the market goes down, the advanced decline line goes down. That's normal, right? It makes sense because essentially if the market's going down, you would assume most stocks are going down. What is happening is that you're seeing the market going up, the advanced decline line is actually starting to go down. That shows relative weakness in the underbelly that's being hidden by these big cap stocks. It's being hidden in the underbelly of this market. And again, the idea is that yes, these big champions, if you want to call them champions, can keep things going, but the deterioration in what we're seeing in the underbelly of the market, which is 494 companies essentially, that is telling us something more important about the economy that eventually will cause those big mega caps to falter. And then when they falter, that's when that tide goes out and we see who's wearing that bathing suit. All right. Enough talk of bathing suits today. It's Monday after all. Couple things to go over here. U.S. 10-year yield getting a slight bounce today. We know it had a big drop last week. Again, classic technical analysis here. You had your wedge pattern, you had your breakdown, you had your retrace to the scene of the crime, and then the drop. You had 4 down days. You're due for a small bounce, right? I mean, it just makes sense. You get a small bounce, but really what I would expect is like a bear flag and then an additional rollover here. Speaking of interest rates, Neil Kashkari, one of the Fed presidents, on Sunday, yesterday, came out and he basically said that he sees interest rates not getting cut until December. And I found that interesting because, number one, the market has been pricing in a September cut. So he's kind of pushing that can down the road even further. But notice what he's doing. He's pushing it off to after the elections. So it's getting close enough, in my opinion, to the elections where this may be an impact. The Fed, by the way, is not going to admit it. Let's be fair. The Fed is not going to say, oh, we're not going to do it for political, like we don't want to sway. They're not going to say it. They're going to toe the line and say, hey, we're going to do it when we need to do it. But secretly, do they talk about, hey, we don't want to look like we're, favoring one side or the other? Yes, of course they do. Let's be realistic about that. Either way, it pushes interest rate cuts out further. And again, we're not really seeing market weakness right now because the Fed funds watch tool is still basically signaling a cut in September. But it is interesting to see more and more chatter about maybe pushing it off until December after the elections at this point. All right, next up, let's just quickly take a look at the U.S. dollar here. The U.S. dollar is flat on the morning session. Again, last week was amazing because we had that CPI data that was really pretty darn good in terms of bringing inflation down. Now, granted, I explained to you how a lot of it has to do with gasoline and oil dropping 9% in May. Gasoline and oil are already up like 6% in June. But the core was still down too, and the core is excluding food and energy. Either way, the dollar fell initially, and then because of the worries in Japan about the balance sheet runoff and stopping the bond buying or cutting back on bond buying and what's going on in France, we did see the dollar become a safe haven asset and be pushed back up and making even higher highs than where that CPI number was or when it came out. All right, so again, just something to watch. We have to watch. This is important. As an investor, you really want to be aware of all the factors, right? You have to be looking at China and Taiwan. That's still on the radar. People aren't talking about it anymore. I think it's on the radar. In fact, I was thinking about it more and more, and you have this side of saying, well, why is China cozying up to Russia so much? Is it because they need a trading partner when they go into Taiwan because they know that a lot of the rest of the globe may pull back on trade, and things like that. Little things like this are starting to make sense to me, and I do think it warrants attention that the markets and investors are not giving it, especially with the VIX trading at 12 to 13 where it is. Either way, dollar remains a safe haven asset. We should keep in mind that that will be the case. It will even gain even if the Fed starts cutting rates because of that safe haven side of things. All right, lastly, let's just talk the Russell, another indicator of overall macro weakness. 2,000 companies. And again, I think I talked about this last week as well, but it is warranted to discuss again. If you look at the Russell, this is the longer, bigger picture of the Russell. This is your 2021 all-time high on the Russell. You have never gotten back there. In addition, if you know your pattern formations, what type of pattern is that, guys? I've taught you this every day in these game plans. That's a classic bearish consolidation pattern. In addition, if we zoom in right here, we're going to zoom in right here. I want to show you something up close that has me very concerned and watching closely the Russell here. What type of pattern is this? Right? That's a head and shoulders potential pattern, which is bearish as well, and that could be a big breakdown. So little things like this, again, the Mag 6, as I call them now, it's not the Mag 7 anymore, it's the Mag 6 because Tesla's kind of gone by the wayside for the time being, but they are controlling things. Respect it while it lasts, but there are these underlying signals that you have to be aware of. All right, on that note, let's get over to, oh, by the way, before we do that, just want to show this, again, this is insider selling and buying over basically the last 60 days. This was your quiet period, so I just want to show you guys this. So this was the quiet period during earnings season where insiders aren't really allowed to sell because it's within that earnings window, so they're not allowed to dump. So some companies could because their earnings might be like 60 days out still, some companies. So you still see a little bit, but look at what happened. Once the quiet period was over, I mean, holy cow, look at the selling and look at the buying. I mean, can you guys even see on there, like the buying, it's so tiny, it's ridiculous. So this, again, I'm bringing this to your attention, not because it means something today or tomorrow, but because If you're seeing this much selling and it mirrors what happened in 2021 before what we saw in 2022, you just want to be aware as an investor. Don't be the investor that sticks your head in the sand and is clueless, and then you're like, oh, I swear I didn't know. Oh my goodness, what the heck? Be informed. Make your own decisions based on the information that we're presenting here at Verified Investing. You can make whatever decisions you guys want. Obviously, I'm here to give you the data. This is the data. I showed you the crocodile jaws. That's the data. You guys do what you want with it. Okay? All right. On that note, let's quickly do our drawing for our Smart Money Stocks and ETFs subscription for 3 months for free, and we'll find out, and then we'll spin that wheel of appreciation real quick, and we're going to get into crypto really quick here, as well as commodities. All right, winner today is Kemra Barwa 307. There you go. Reach out to Lawton at verifiedinvesting.com. He'll hook you up with 3 months of Smart Money Stocks and ETFs, a value of $450. Very cool right there. All right, follow me over here. Let's do a quick spin of our wheel of appreciation and see what we're giving away tomorrow. All right, there we go. Smart Money Crypto. So crypto, if you're a crypto fan, make sure you spread today's game plan on one of your socials and get entered into the service crypto here. I actually just took a 21% gain on Chainlink short this morning. That was closed out this morning, and we entered a long position over the weekend. So very cool. There's good action starting to go. As we get more volatility in crypto, there's going to be a lot more trades as well. So get involved in that right there, and we'll give away 3 months of Smart Money Crypto tomorrow. On that note, folks, we're going to thank our amazing sponsor, LuxAlgo. Their links below here, guys. They are all about data. They have signals. They have data, technical signals, all the stuff that you need to be a technical trader. So check them out, and we're going to take 30 seconds now to thank them.
Have you considered enhancing your trading experience? We have an amazing tool for you. LuxAlgo creates next-gen trading indicators to help the world understand the markets in a smarter way. They have the largest user profile on TradingView and are the only official Discord partner in the technical analysis space. LuxAlgo Premium operates seamlessly with top platforms, such as TradingView and Discord, making it the perfect tool for every trader. Take your trading analysis to the next level with LuxAlgo. Please visit the description below and sign up for LuxAlgo today.
All right, guys, we are back. Here is our chart of Bitcoin. Bitcoin is selling today, so interesting price action here on Bitcoin. Bitcoin last Friday pierced this level, but they saved it. Amazing. Amazing to watch the levels get either saved or broken. In this case, how many times have they saved it over and over again from closing below this line? What do we find today? We're right back to that level on a down day on Bitcoin, and this is going to be big, guys, because I'm going to show you something. There's a secondary channel that I found that literally makes this point, right where price is, the most important point for crypto in the near term and potentially over the next multiple months. If it holds, I think it's all-time highs. If it breaks, 50K or lower. Let's take a look. I'm going to show you me drawing this line in right now. This is a line that, again, a little surprised I didn't see it before, but that's the nature of charting. But what we're doing is we're taking these lows right here. Look at this. You take this low, you connect it through this low, you literally get right here. And the reason why you know it's an important level is you can stretch this up and get another parallel in the charts here, all right? So what I mean by that here is if we zoom in a little bit more, let's keep kind of bring this in here. Look at what we have. We have this line here, which starts down here, goes to here, and then we're right there right now. And look, if you bring that parallel up, it gives you this exact high, and this exact high. And that's one of the ways, by the way, you check your trend lines and your parallels, is that if you do a parallel and you extend it and it doesn't kind of mesh with any other multiple points on the chart, you're probably wrong on your line. But when it matches, it gives you credence that you have something, that there's something to that level. So we have this line, this channel upsloping, this channel downsloping right through here and here, right? And that parallel on the downslope gives you this and this point right there. And we now have a cross section right here. And that's what I mean by this. You have two crosses of two major trend lines right at price, If it holds and we start moving up, I honestly think we blow right through 74,000. I think so. All right, that's how powerful this area is. But if we get a daily close, especially if it confirms below here, there's literally no major supports until you get down here, which also matches with this level. See this flat line right here? It's all in the same zone, and that's right around 50 to 52,000. So I will go on record and say that I think this is the most important point on crypto, the most important set of days, the next couple days that we have seen in crypto in months. Watch it like a hawk. I will update you in the game plan every single day. Next up, Ethereum, guys. Ethereum had a nice little weekend, actually. But again, stalling and falling today. We basically have this level of resistance right here, right through these lows. We broke down. We got a bounce over the weekend. I'm still thinking that there's a chance we could come down here, especially if Bitcoin breaks down. But I would definitely be looking to maybe buy that level right down there on Ethereum. Next up, let's take a look at gold. Gold doing exactly what I've kind of guided you guys to believe gold should do based on technical analysis, based on probabilities. And what I mean by that basically is what we have here, right? We still have this little inside bar bearish flag pattern forming, right? You got a little parallel right there, sideways consolidation. As of now, as long as that pattern holds, it favors downside, further downside in gold, right? So just be aware, yes, you have support here. I mean, that's clear as day. We hit it right here. But overall, if this can start to break down, you're likely headed down to this shelf right here. See this beautiful sideways consolidation before the breakout? That would be your next technical level. I think it's right around 2,200, just below 2,200 on gold, all right? So again, that could coincide with a stronger dollar, maybe risk on still out there. We'll have to see what the catalyst is if that breaks down. Now listen, if price of gold, and this is important, if price of gold gets above this high right here, now all of a sudden the bearish side is negated, probability shift. Just like when you're playing poker and you see the World Series of Poker and the odds in, we see on TV, we see their cards and their odds shift. Same thing would happen here is all of a sudden the odds sharply change from being bearish to being bullish, and I think we start our next leg up. I ultimately remain neutral to positive in the midterm and very positive in the long term on gold. Silver, flattish on the day today, still sideways consolidation. You have the down channel here, which is ultimately bullish. The question is, how low do we go? But ultimately, I remain neutral to positive on silver mid to long term as well, thinking that eventually we break out and go even higher. It's just a matter of how low does this go, right? If we continue down here, do we just continue to chop like this until it finally breaks to the upside on that silver chart? Last two I want to just do real quick. We have oil, which was down early this morning, but is upticking a little bit. Thinking more and more, this is looking like a bull flag, right, guys? So you have the green flagpole right here, and then you have sideways consolidation. This is making me think you might be headed up to this trend line here, which would take us to about 82. Once we get to 82, then I think that's where you see that bigger pullback start on the chart of on oil. Lastly, natural gas. Nice little pullback in nat gas continuing here. We are coming into a little bit of support, though. If we take this low and we extend it right out here to these lows here, you get a general level of support around 280. That'll be a little bit of short-term support. If that breaks, we're going to go back to that level. I will let you guys know, again, what I think is going to happen. And right now, I think we do at least touch this, but I'm unsure about whether or not it breaks or not. I'll be watching the price action in real time throughout the course of the day. And again, folks, if you want commodity trades like natural gas, like gold, like platinum, palladium, smart money commodities and miners, the service I run. And just as always, I have smart money crypto for crypto trades. I talked about that earlier, and smart money stocks and ETFs if you want stock and ETF trades like Apple, Microsoft, and the rest of those guys out there. All right, on that note, folks, I think we're about ready to get to the trading floor. Don't forget, we have the live coming up in about 20 minutes from now. We'll be live there on the trading floor as we are trading with our members in the Apex Live Day Trading Room. So I got to get there, but great job today, great game plan, and a great start to the Monday. Take care.